This is AHL Explains. I'm Anthony Ledford, and today I will explain breakout trading. Breakout trading is one of the most popular of systematic trading strategies, and it's been around for a long time, with many variants. Today we'll only scrape the surface, but it can be used for trading cash equities, futures, FX, and other instruments and markets. In terms of style, the aim is to capture directional persistence, and for that reason it's a time series momentum strategy, so you should expect it to be correlated with other trend or momentum systems. Where it's different to these systems is that it's based on price levels. There's a lower boundary, sometimes called a support level, and an upper boundary, sometimes called a resistance level, and providing the price is between these two levels, then no action, no trading is needed. But if the price breaks out, that is, it goes through one of these levels, then it will tend to keep going, for a while anyway, so there is a directional profit opportunity. If the price goes through the support level, then you issue a sell. If the resistance level is breached, then you issue a buy. And sometimes other information is used to confirm the significance of these breaches of price level, for example, looking for a surge in the volume data. That's the basic idea, but there are various other components to consider. For example, how to set the levels, that is, where to put them. You might do this statistically by looking at the maximum or minimum prices over some look-back period, potentially adjusted by the volatility. Or you might look for meaningful numbers. These are things that market participants think are important. For example, multiples of $10 for the oil price. In addition to deciding when to issue a trade, you also need to know what quantity you want to trade. And any trade that you put on, you also need to think about when to take it off. Okay, so let's have a look at an example. So I'm going to draw a pair of axes, price and time, and onto those I'll draw the price history. And this vertical line represents today. Now I choose a look back, for example 1 week, and I draw another vertical line corresponding to a week ago. Now to initialize, I'll simply set the resistance level and support levels using the maximum and minimum prices over that look back period. Once I've got these, then if the price tomorrow stays between the resistance and support levels, I do nothing. On the other hand, if the price decreases through the support level, and this decrease is confirmed, e.g. by a surge in volume or by the next day's open remaining below the support level, then I would issue a sell at that point. If the price was to go upwards through the resistance level and that upward move further got confirmed, then I would of course issue a buy trade. Once this has happened, then I need to reset the resistance and support levels, and I do this once the new local maxima and minima of price get established. Often you'll want to ensure that the resistance and support levels are not too close together. This avoids noise trading. For example, you might need to factor in some gap between them based on the price volatility. Once a trade has been issued, for example of a fixed size, then we need to decide how to execute it. And as always, it's about weighing up the profit opportunity. If we trade too slowly, we will miss the profit, versus the cost of trading. If we trade too fast, then that will lead to market impact. Now once the trade is on, that is, it's been completed, we need to think about how to take it off. This can be done in various ways. For example, we may taper gradually and close out the trade over some time horizon. Or we could leave it open for some time horizon completely untouched and then close it out sharply at the end of that period. An alternative way of doing it is to leave it open and close it only when an opposite trading signal arises. All of these are possible ways of dealing with breakout systems. Now diversification is as important here as anywhere else, and so rather like standard momentum systems, we can overlay multiple breakout systems and catch some diversification. For example, I could include a 3-week look-back period, shown here by these green lines, and this would give me additional support and resistance levels. Risk control is also an important part of any strategy, and you may want to cap the maximum position or trade size that gets generated, especially when multiple levels from these overlaid systems trigger in close succession. You may also include stops. This is a mechanism that closes out positions automatically if they generate material losses for you. And just as we've seen elsewhere, we can combine these ideas with volatility scaling, another very effective way of controlling risk. That's all we've got time to say about breakout trading for this episode. Thanks very much.